Hey friends, it's Ian Khan here at Consensus 2025. I've got Jelena with me. Jelena's doing incredible work. They've grown significantly over the last few years. So let's bring in Jelena. Jelena, tell us what you do.
All right, it's great to be here. So I'm Jelena. I'm the co-founder, CEO of Noble. Noble is a stablecoin issuance protocol. We work with stablecoin issuers like Circle, Ondo, Hashnote, and others to help them go directly on-chain to dozens, hundreds of blockchain applications. So very crypto native. Noble itself is a layer 1. We recently launched our own stablecoin called Noble Dollar. It's a USDN. It's a yield-bearing dollar stablecoin, and we've grown that to 100 million in about 2 months. And otherwise, we're just really in the business of making it easier for crypto application builders to leverage these stablecoins.
Yeah, so just for the understanding of keeping it really extremely simple, what are stablecoins and how did they originate, right? I know the story. I want you to explain it in your words.
So stablecoins were actually came on the scene about 10 years ago. So the first stablecoin, of course, was Tether, USDT. This is a US dollar stablecoin. So when we talk about stablecoins, we talk about crypto assets that track the value of real fiat currencies. 99% of the market is US dollar stablecoins. Only 1% of the market are non-US dollar stablecoins like the euro or the yen. And basically, since 10 years ago, we've come really far. So we have Circle's USDC, we have new entrants, of course, like Noble, looking to innovate on that stablecoin layer. So currently, it's about a $250 billion market cap. Just 5 years ago, it was actually a $5 billion market cap.
Yeah.
Projections in the next 5 years that it'll be between 2 to 3 trillion, market cap.
Yeah, so really we've come a long way from, Bitcoin being the first cryptocurrency, and then there were hundreds of them, and then we had many which crashed and whatever happened to them. But then this movement started with stablecoin, that one coin is equal to the US dollar, there's parity, and then there's quite a few of them, not in the thousands, but there's a handful of stablecoins, and the ecosystem is growing. Stablecoin ecosystem is growing, which means, okay, well, maybe they are stable, as the name says.
Yeah.
Right? So you, as an organization, are providing the infrastructure for stablecoins to be on chain, and you also have your own stablecoin.
Yes,
right?
Exactly. One thing to note that's really important is that we've come a long way in terms of making these stablecoins safe and, as you said, stable. So we have had situations in the past where these coins were collateralized through very risky mechanisms. So I'm sure you remember we had Terra's UST, which was an algorithmic decentralized stablecoin that was not backed by, in our case, their treasury bills, as is the case for every blue chip stablecoin issuer. In their case, there's a volatile cryptocurrency. So actually in the last little bit, we've come a very long way to making these stablecoins more safe. And that's partially through regulation. It's partially because the industry and builders have realized, when it comes to these currencies that people hold because they expect them to be redeemable for, $1 US, they need to be collateralized properly. They can't be collateralized, through a speculative, volatile token.
So basically, if I were a person and I would say, hey, I'm going to create my own stablecoin, and I would say, okay, one Ian Khan stablecoin is equal to $1. Here you go, everybody, go buy it, right?
Yeah.
And everybody's going to be like, okay, great. How did you come up with that calculation, Ian?
Yeah.
And who's backing you on that, right? I'll be like, well, nobody. Well, I could be a scammer, right? There.
Yeah.
And that's how many coins, whether they're stable coins or not, they've crashed, and there's been all these different schemes. But then, if I say as an organization, hey, with every coin that I'm selling or somebody's buying, I'm actually going to buy $1 from the government, or I'm going to buy a treasury or something. And so if I've sold $100 billion worth of stable coin, I have $100 billion in my bank.
Exactly.
Right?
Yeah.
So it's very simple.
Yeah, exactly. Yeah. And I mean, for Noble Dollar, for USDN, we work with a tech stack. It's called M0, and they have a really actually genius kind of platform where there's an over-collateralization mechanism. So actually, USDN is 107% over-collateralized by treasury bills. So I mentioned it's about $100 million TVL right now of USDN. Therefore, there is about $107 million worth of T-bills in bank accounts that are safely custodied. There is obviously the redemption liquidity risk. We did see that with Circle's USDC when there was the kind of DPEG a couple of years ago.
Yeah.
But basically, we've become a lot, smarter, from a custody and collateral perspective of these, treasury bills.
Incredible. What are you seeing a result of recent U.S. administration changes, work on regulations? How are you feeling about that?
Yeah, I mean, generally it's all very positive. So again, in the stablecoin space, there is the Genius Act, which has been proposed. It's a bipartisan piece of legislation that is a very comprehensive document that treats stablecoins as payments instruments. So these are not securities, these are not commodities, these are payments instruments, and there's a very clear guidance around, again, collateral management, and generally allows for a much more permissible environment for innovation with these stablecoins. So generally, it's all quite positive.
Great. I also see stablecoin providers who are now who now have like a debit card. You can use a stablecoin to pay for something. Is that something that's the next thing that'll become better?
So the Noble network is actually already supported by a few card providers, just because the Noble network is very, very fast, 1 second block times, super high throughput, on the orders of a Solana network. So we're ourselves obviously very interested in that market. But yes, basically we're finally at that point where crypto is like usable in everyday scenarios, whether that's payments, whether that's treasury management, payroll, and the like. So yeah, we're very excited. Also, Visa for the first time actually in their last earnings report mentioned stablecoins in their earnings report 7 times. That was the first time ever. So even like Visa network, MasterCard network, they're from a company strategic perspective very interested in stablecoins.
Excellent. What about regional dynamics? Do you feel a certain region is more acceptable to stablecoins or not in terms of consumers actually using them?
Yeah, LATAM is obviously a huge market. So South America, in Argentina, something like 1 in 4, let's say, maybe even more people use stablecoins, hold stablecoins. Obviously, in countries with high inflation or geopolitical instability, they're using stablecoins. We see a lot of demand in East Asia, in Korea, also Southeast Asia, Vietnam, Indonesia, Turkey, Nigeria. So yeah, basically places that have bad banking infrastructure or have currency inflation, and they're really tapping into this new asset.
Okay, good. Last question. If you had a wish, what would it be? Like for the next few years, hey, I wish this happens because then it'll be amazing. Is there something technological that you feel needs to happen, more integration? I don't know what it is. What is it that should happen?
So I actually think from the infrastructure perspective, we've come so far. Blockchains are now fast. They're scaled, okay? 3 years ago, we were probably at this conference talking about scaling. That's not actually a big topic anymore because, we've seen, immense improvements on that front. So not really on the infrastructure side. What I would want to see is really a crypto native global application really just take off, like a global Venmo type product, right? Like a global kind of neobank type product that people can safely use. And I think the fintechs of the future, they'll be crypto native from day one, they'll be global from day one. So I really just want usability and safety and reliability for these crypto assets for billions of regular people.
Amazing. I want to ask you a follow-up question. Identity management, security.
Yeah.
Where are coins with that? Stable coins, where are they with that?
So that is something I would also like to see happen if I had a second wish. Privacy. So basically making sure that if we are in a situation, obviously where billions of people are transacting with these stablecoins on chain, they are private, by default. In the same way that messaging apps, or certain messaging apps are private by default. So that is definitely something that's needed. Identity management, I think, comes with privacy, and that is also something that I think, there's a lot of improvements to be made there.
Incredible. Well, thank you so much for sharing some insights with us, and we'll keep a watch on what you guys are doing. But thank you for innovating. Thank you for being here, and we really appreciate it.
Thank you so much.
Thank you.